There we go. Yeah, it was enthusiastic. Yeah, I appreciate that. That one, good morning. I appreciate it. Okay, so obviously a lot of great content through the morning here so far. Thank you so much to Lee and the rest of the organizers for having us. As you mentioned, my name is Gerald Gallagher. I'm general counsel at Say Labs in real life, and then on the side, I'm also the host of a podcast called Crypto in America with Eleanor Terrett and Jackie Melnick. We talk policy and crypto and all things in between. And so I'm joined today. I'm going to let the other two panelists introduce themselves, but we're going to talk a bit about the topic du jour, treasury companies, and what that means. So guys, why don't you introduce yourselves?
Sure. No, thanks, Gerald. So my name's Lauren Asmus. I lead capital formation for UTXO Management. We're a global asset management firm solely focused on the Bitcoin ecosystem. We're also the sister company to BTC Inc., which is the company that runs the Bitcoin conference and publishes Bitcoin Magazine. Had 35,000 people in Vegas last month, looking to have 50,000 people next year. So you're all invited. Great to get those numbers even higher, but thank you for having me today.
Good morning, everyone. I'm Matthew Pines, the Executive Director of the Bitcoin Policy Institute. We're a 501c3 nonprofit think tank devoted to Bitcoin. Specifically, we advise policymakers on the intersection of Bitcoin and emerging disruptive technologies like AI, as well as the developments taking place geopolitically and what that means for Bitcoin and what it means for U.S. national security. So my background is in government consulting on emerging technology and U.S. national security. I was director of intelligence for a geopolitical and cybersecurity firm before I decided to take the plunge and help lead this Bitcoin think tank. And so we've got about 24 fellows. So these are national security experts, philosophers, economists, human rights activists, folks that are doing research and sort of providing peer review quality products for policymakers in DC. And we have a core team based in DC. We just did a big Bitcoin policy summit last week, which was quite successful, about 1,000 people, all listening to a bunch of nerds basically talk about Bitcoin for a full day, and it was great. And so happy to do some more of that talking too.
Perfect. Thanks, guys. So Lauren, I'm going to start with you. The topic is actually securitization of Bitcoin, and I would argue that actually started with like the ETPs or even earlier products in these treasury companies. But I want to ask, I guess, kind of a fundamental question to sort of level set. Why do I need public market exposure, or why do I need listed instruments with Bitcoin exposure? Why can't everybody just go set up their wallet and buy Bitcoin? Like, what's the fundamental need for a product like this?
That's a good question. I mean, theoretically, people could set up a wallet and buy spot Bitcoin on whatever exchange they want to. Realistically, it's very infeasible for large institutional pools of capital to do so, or outside of their mandate to own spot Bitcoin directly or hold their own keys, their own wallets. The three of us can do that individually very, very easily. But as an organization or a corporation or a sovereign wealth fund or an institution that's sovereign, very, very much harder to do. And so really the securitization of Bitcoin through ETFs, through companies like MicroStrategy, owning almost 600,000 Bitcoin on its balance sheet now, is the fact that you're now able to securitize Bitcoin into traditional capital markets and unlock institutional pools of capital that historically could not access Bitcoin, now can do so in a wrapper that is easy for them to purchase, to own, and to custody. So that's really the huge unlock that's happened over the last, say, year and a half, through first the ETFs, obviously BlackRock being the biggest, Larry Fink going from a skeptic on Bitcoin to now a proponent of Bitcoin, to corporations now, really driving adoption and purchases of Bitcoin on their balance sheet globally. Everyone's very familiar with Michael Saylor, I'm sure, MicroStrategy, but now it's really become a global phenomenon in terms of all these other capital markets around the world doing the same thing.
Yeah, I think it's great to highlight kind of the shift over time here, and I want to talk to you, Matt, about more like the way sort of the winds have changed. We were just talking about some of that off to the side here, but I want to stick with that point, the MicroStrategy sort of origin story. I come at a lot of things with like a corporate governance perspective, and that had to be like a pretty interesting board meeting back when he was like, guys, the software thing, I don't know about this. I think we should just buy Bitcoin. How do you think about just that first move? Because when we start talking about a treasury company, ETF is obviously a different product, right? Or ETP. But when we start talking about a treasury company, you're talking about basically an actively managed strategy on a corporation's balance sheet. Do you think that, in my mind, there's this alternate universe where like MicroStrategy bought a bunch of Bitcoin and then there's like a 70% drawdown and then like sailors out and like we're continuing along on the journey here. But from a corporate governance perspective, what do you think boards are seeing in that strategy that makes it interesting to them now? And why do you think we're starting to see so many of these companies pop up and look at this strategy from a fiduciary and a corporate treasury management perspective?
Yeah, well, I guess to that point on a Bitcoin drawdown during the Sailor strategies, he first made his purchase in 2020, so he actually did incur almost a 7% drawdown to Bitcoin and survived. Yeah. And his stock did trade at a slight discount at the time. It was very short-lived, but it did. But I think it showed the conviction that he had in Bitcoin and what the asset truly represents, which is a store of value, finite, scarce asset that cannot be censored. And so I think a lot of other people out there are now realizing those key tenets of Bitcoin. And if you're able to issue low cost of capital, long duration debt vis-a-vis corporate markets, use that to buy Bitcoin, which has historically grown at a 50 to 60% CAGR over the last 10 years. And according to Michael Saylor, who knows where Bitcoin's price will be over the next 20 years, but he's expecting a 29% CAGR over the next 21 years. It's really just financial arbitrage, right? Of using cheap corporate debt and buying a finite asset that's going to continue to increase in its value based on its key tenets. And so I think other corporations are starting to key in on that, and other capital markets have that demand.
Yeah, and Matt, on the policy side, I guess going back to sort of the dark ages from a policy perspective of that, like 2020, 2019, I was talking to somebody yesterday about GBTC and the struggle that some of those products had to get listed and like educating regulators around those products. How far do you think we've come just from regulators understanding Bitcoin as an asset class and like what this can do, from a balance sheet perspective and just, for consumers in general?
Yeah, if I rewind the clock back to when BPI was founded in 2021, I think the prevailing narrative of kind of the cycle of adoption would be sort of retail. The MicroStrategy move sort of, I think, set expectations that corporates would adopt it first, and then maybe the ETF, would get approved ultimately, and then ... somewhere down the line, sovereigns would sort of get in the game. And I think everyone sort of was plotting out a semi-linear sequence of these things. And I think what we got was much more of a chaotic kind of melange of things, all happening at the same time. We had sort of this corporate adoption that then kind of didn't really go much further, right? You had basically MicroStrategy and really nobody else emulating it for many years. And then you had the ETFs approved, and I think that was the sort of the green light that triggered a lot of subsequent activity. But then you had President Trump get elected and effectively declare an executive order the White House's view that Bitcoin was a, quote, strategic asset. They viewed it as digital gold. They established the strategic Bitcoin reserve. They intend not to sell any of their Bitcoin, and we're waiting on a report maybe coming next week that will identify, does the government have an accumulation plan to acquire additional Bitcoin in a budget-neutral fashion? Or remains to be seen, to what extent that will be implemented. And so at the same time, you have these Bitcoin treasury companies kind of popping up left and right, including globally, right? I think that's probably the most interesting overlay between U.S. national policy, this shift in the strategic view of Bitcoin that's coming out of the White House, and that's being interpreted by other countries in, I think, an evolving fashion, right? Other countries are looking at the White House, looking at the president and seeing, well, does he mean it? Like, what does he mean when he says Bitcoin is a strategic asset? Is this just a rhetorical flourish, or do they actually intend to acquire Bitcoin as a strategic asset, which, depending on how you interpret that, for national leadership in other countries is a very important and serious question. What the U.S. government decides to do can have ripple effects across the entire global economic and financial system. And so you have that kind of top-down strategic overlay coming in the context of firms like UTXO Management and related activities going around the world and essentially setting up these Bitcoin treasury companies to sort of capture this geographic and financial capital markets arbitrage. So you have Metaplan in Japan. I think just every other week I look at, there's another thing popping up in Thailand, in England, maybe South Korea, Brazil, Canada, Hong Kong. So they're happening everywhere. And I think that is not happening in a vacuum. I think national leadership in these different countries is paying close attention to the emergence of these Bitcoin treasury companies. And just like Metaplanet, for example, I think was like the most highly traded stock in the Japanese stock market, right? So that doesn't it's not just like a side sort of phenomenon, right? It's actually drawing the attention of national regulators and national leadership. And I think the intersection of these Bitcoin treasury companies and the geopolitical perception of Bitcoin as a strategic asset is kind of co-evolving. And I don't think anyone has a clear sense of how this will emerge, but then it's going to feed back into the U.S. system as well. There's kind of a reflexivity here, which, to first order, U.S. politicians pay attention to Bitcoin to the extent that its price goes up, right? That's kind of, it doesn't really matter that much when it's a few $100 billion asset. When it's a few $1 trillion asset, it matters a lot. When it's a several $1 trillion asset, well, then it's a significant thing. And so I think we're in this moment of potential transition from being a tenth of gold, where it's interesting, but the really strategic implication is if it goes from a tenth of gold to, say, half of gold. And that's a very different type of question now that national leadership across the world has to pay attention to. And that possibility went from being pretty remote to being plausible in the next few years in the political time horizon of current leadership. So that's a sea change, and that's happened pretty quickly. And I think we're still sort of adapting and digesting that.
Yeah, and so Lauren, I'm curious. There's a notion on this. I guess I'm going to call it proactive, productive tension between sort of national governance sovereigns looking at this asset class and then institutions obviously adopting it. There's a bit of a like, is the tail wagging the dog, or is the dog actually wagging the tail? How do institutions perceive the notion from an asset class perspective of the United States or other sovereigns actually establishing like an SBR? Like, how is that driving the thesis?
I mean, I think it's a big deal. It establishes more credibility to the asset. Before I joined UTX, I was with a institutional investment consulting firm, and I personally got into Bitcoin 8 years ago or so. But if I were to bring that up to the board, to the IC at the time, I might have been fired. Like, to be honest, right? I would have been laughed out of the conference room, so to say. The last year I was there, we ended up approving one of the Bitcoin ETFs and invested in several digital asset venture capital strategies along the way. So, and part of that, I think, is because the fact that now there is this regulatory tailwind and political tailwind behind the asset. People are starting to do their homework, do their education, understand what Bitcoin is and what it isn't. I mean, we just did published a report a few months ago, last month, on our forecast for institutional adoption to Bitcoin over the next year and a half. And being fairly conservative with our estimates, we estimate about $426 billion will flow into Bitcoin with a mix of sovereign adoption, corporate adoption, and individual adoption continuing to grow. So, no, I think the regulatory aspect of it is very, very important, and there definitely is a connection between what's happening at the sovereign level, state level, and what's happening at the corporate level.
Yeah, I think that makes a lot of sense. And Matthew, I'm curious on the policy side. There's been a lot of attention over the last several years about the way Congress members, for better or worse, sort of interact with traditional securities markets. Famously, some of them are pretty active traders. Historically, they have not really on the regulator side. So famously, the SEC in particular is not able to own any crypto at all. So there seems to be a lack of familiarity with the asset class itself, kind of beyond seeing the headlines, the momentum, and maybe the questions from constituents or like retail traders. Do you see more interest or any kind of legislative initiatives? I know there was basically a non-trading provision entered into one of the pieces of legislation recently around crypto. How do you think Congress members and regulators as individuals are like interacting with this asset? Do you talk to a lot of people on the Hill who are owning Bitcoin, who are interested? I know Senator Lummis obviously has been a huge proponent of the industry and Bitcoin in particular as an asset class. But what are you seeing when you talk to people on the Hill?
Yeah, it's obviously folks been around DC know kind of how the system works, right? You have the principals, the elected representatives, and they have staff, right? And so ultimately, the staff are the ones that are driving the train on a lot of the legislative initiatives that actually do the drafting, do the sort of committee work, and coordinate across different offices to kind of reach consensus and agreement. Often the top level guidance has to come from the member, but the working level staff are the ones that ultimately can be the veto or can actually make things happen. And so that I think has been the most significant shift, because those are mostly younger type folks, and I think the a lot of digital assets have this generational component where you have to kind of get it. You have to kind of understand this is part of the ecosystem. This is sort of a feature of the environment, and it's not going away. I think that's just part of the air that 20-somethings breathe. And so I think for the typical staffer, this is not an alien concept, not an alien technology. Obviously, the devil's in the details about how to regulate it in a prudent fashion, and obviously to separate out the securities and commodity style things. Are you investing in something where there's an insider group that you're investing in their work, you're investing in their promises, or investing in essentially a synthetic digital commodity like Bitcoin? I think the ethical considerations are very different between those two different types of investments. But we just did a kind of a briefing for 20-something level legislative directors on Bitcoin policy specifically, and the feedback was like this really refreshing because, well, one, most of the briefings they've gotten were on digital assets, right? And so this was stable coins and how to regulate securities in a way that provides sort of this sandbox, et cetera. But no one had actually come and given them like a serious briefing on Bitcoin, and where the Bitcoin Policy Institute, that's what we focus on. And there was, I think, a perception that Bitcoin is about 2/3 of the total market cap, depending on how you measure it, maybe even 90% if you exclude lots of other things, stable coins, et cetera. And yet, its sort of percentage of the bandwidth in DC is actually much smaller, right, in terms of the policy conversation. And so the priorities set right now are stablecoins, Genius Act. That's basically almost across the finish line. The Clarity Act, right, is going to be setting up this market structure framework. And then coming out of sort of left field from the perspective of kind of the DC ecosystem has been concept of a strategic Bitcoin reserve. And exactly what does this mean for U.S. government's disposition to Bitcoin as a strategic asset? And so that has been where the fastest learning curve has taken place. I'd say at the elected representatives level, it's very much sort of hit or miss, right? So at our policy summit last week, the following day, we brought 120 Bitcoiners to like a day on the Hill, and for 8 hours, essentially, all the Bitcoiners wearing suits, which they don't normally do. They cleaned up nice. They swapped their hoodies for ties, and they went and they met with
orange ties, right?
Orange ties, I think.
Orange.
And they met with basically half of the Senate offices and about 60 members of the House, and they had really great conversations. And the feedback we heard from both the offices and the folks that were having those conversations was that this was the first of its kind of thing. So despite the fact that Bitcoin's a $2 trillion asset, despite the fact that it has, I think, a strong political constituency, Bitcoiners haven't really engaged in politics that much, right? I think this last election cycle was maybe their first entry, but even then it was mostly, a handful of people kind of donating to large PACs. But the grassroots Bitcoiner, I think, really hasn't been engaged. And I think it was an eye-opening experience for a lot of both the members as well as the participants. Actually have a frank conversation where constituents explain why they hold Bitcoin, why they use why they use it. And it's not an advocacy group or a lobbyist. It's like an actual constituent who uses this thing. And the fact that sort of hadn't happened before, is either bearish or bullish, depending on how you look at it, right? So it seems like there's a lot of room for improvement in just basic education and basic communication and connecting the users of these technologies to their representatives.
Yeah, and so Lauren, on that point, Bitcoin obviously is, as we talked about, extremely volatile asset. Your job obviously guiding institutions to do some. I'm not going to ask for prediction or for financial advice here, but is to guide sort of folks in the right direction on where we're headed. And I want to talk about the structure itself of some of these treasury companies. We've seen a lot of like pipes and SPACs, and it seems like we're seeing some very 2021 vibes on certain things. But just from your perspective, how much does SBR working out or not working out impact this line of institutional investment? Like, are we talking about it being partially baked in here? Is there like still a ton of room to grow? Obviously, like it seems like other sovereigns are moving into this regardless of what happens in the U.S., but we tend to be a leader there. Like, what do you think the implications are of whether we get this done or not on the SBR side of things?
Yeah, I mean, at the end of the day, Bitcoin's a global asset, and I think it's great, potentially having an SBR and bringing more of this the leadership and all of the businesses and innovation here on shore, where it should be here in the U.S. But in terms of this corporate adoption, especially as it globalizes, I think it helps, but I don't think it hinders the continued adoption from a corporate level. I think corporations are speaking with their money, with their capital, with their the fact that they're totally reinventing their businesses regardless of what we hear from the U.S. in terms of an SBR. So I think the corporate adoption is going to continue. I think an SBR could definitely turbocharge that. But I think it's started already, right? Like this flywheel is going. So no, I think it's interesting. I think a lot of people first thought that maybe sovereigns were going to be the first to really kind of spur this institutional adoption, but it's really starting from the corporate level.
Yeah, I'm very curious. I know I want to step away from Bitcoin for a second because this has spurred a lot of other sort of treasury strategies, right? So we saw Sol Strategies in Canada kind of come up with this public exposure model where essentially that company is owning Solana validators, and the ETF or ETP is supposed to sort of roughly trade on the revenue that you could produce from like a Solana validator, right? And people debate like what is the right role for what I'll call an issuer, like a governance foundation, to actually be involved with those companies. Bitcoin, it's a little different, right? You don't have to go to the CEO of Bitcoin and say, I'd like to buy 20 million Bitcoin. You just kind of do it. And it also makes like regulatory perspective much easier because there is no sort of counterparty or insider there kind of fueling or flywheeling, for lack of a better term. I'll call it dog fooding your own bags on some of these company models. What do you guys think about, whether it's the Ethereum ETFs or like a Solana Strategies, or even it seems like a lot of other tokens are getting into the mix here in terms of getting public exposure for these assets? Do you think it's just like rising tide all boats? Do you think Bitcoin is sort of the only true north here? Like, how do you perceive those other strategies, these other digital assets kind of getting into this?
You're probably a better expert on that.
I mean, my personal opinion is, at the end of the day, Matthew pointed it out, Bitcoin is 2/3 of the market cap of crypto, but almost 99% of the total liquidity. And institutions and large pools of capital need liquidity and they need size, and the other digital assets just don't have that. So I just don't think this corporate strategy plays well for the other crypto assets. And also, there's different use cases that we all know, right? Bitcoin is the apex store of value digital gold asset, finite scarcity. That's different from other cryptocurrencies, and where there may be other forms of utility or use case. And so I think this specific strategy is really geared towards Bitcoin. I may be a little biased because I work for a Bitcoin-only company, but that's also my personal opinion. Is I think because Bitcoin has 99% of the liquidity out there and is now prime in terms of its size for institutional pools of capital to come in, that's where the success is going to be.
I'd say my larger observation is a symptom of this dynamic that's kind of the interpenetration of the crypto economy and the traditional sort of financial markets and the regulatory framework. And so there's lots of experiments. I think the nature of experiments is that most of them fail. So I think we're going to see this kind of Cambrian explosion and then a selection effect, and the strongest will survive. And so I'm not going to prejudge market outcomes. I think there'll just be a natural selection effect. But I think what I'm paying most close attention to that I think will be enduring strategic trends is the evolution of Bitcoin as a global reserve asset, both at the sovereign level in terms of global sovereign balance sheets, as well as corporate institutional balance sheets and stablecoins. And those two trends are like firmly set in motion, or almost ratified now by national policy. And so those have a lot of momentum, and that's going to have a global effect, right? Stablecoins obviously are a global phenomenon. There's going to be a rapid expansion forecast by the Treasury Borrowing Advisory Committee from 200 billion total stablecoin issuance to 2 trillion, maybe more, 3 trillion in the next few years. And that's going to come, potentially in line with steady monetization of Bitcoin around the world. And so this is going to not just be a U.S. phenomenon, but a global phenomenon. And there's going to be business models that then emerge on top of those phenomenon. And those business models might be taking advantage of these other trends coming out of AI, right? So if you have agentic systems or agent-based tools that can conduct commercial activities on your behalf, they need payment rails. And those sort of endogenous crypto rails are going to be the most useful things for AI agents to transact in and sort of do micropayments or streaming payments. But then what's the reserve asset of that AI economy most likely to be? Is it going to be treasury securities? Is it going to be gold? No, it's going to be a natively digital hard money asset like Bitcoin. So I can see this synergy between global proliferation of stablecoins, the rapid increase in AI-based tools and systems that are sort of interpenetrate the crypto economy, and then essentially the global reserve asset that is sort of being institutionalized and normalized will be Bitcoin. And I think that will set up a flywheel that could go pretty fast in the next few years.
Yeah, I know we're running out of time here. I hear lots of glasses clinking. I know we're holding you back from lunch. So, Lauren, I'll give you the last word here. Like, how does, not to offer a bearish thesis here, but like, how does this all go sideways? Like, is it just up only? Are we? Because I think those were great adoption, use cases that Matthew laid out. But like, is there anything on the horizon that kind of gives you pause that people should look out for? Or, what's sort of the counter thesis here?
No, I mean, we still subscribe to the 4-year cycles with Bitcoin, right? You have 3 great years, 1 terrible year of performance. Until we see something different, that's still our base case. And I think a lot of it could come potentially from these treasury codes down the road. If there's just mass proliferation, folks taking on too much debt. Right now, it's really a lot of people just trying to get out there, trying to get the flywheel going. But there are going to be people who probably get over their skis, get over levered, are not doing it the right way, don't have the right team in place to do it. To where you're going to have to be very selective of the right groups that you're going with it, that you're either investing or partnering with. So, yeah, I mean, when you have a finite asset like Bitcoin and you have demand that fluctuates, there's always potentially times where things get overheated, and so we could definitely see that.
It's a great point. DYOR always. Thank you to both the panelists, and thank you again to the organizers for having us. Appreciate it. Enjoy lunch.
Thank you.